I think it's quite a crucial one because West Africa is an outlet for the European gasoline. So the traders are reliant in Europe on taking kind of EBOB spec and making the changes to send into the US, but also West Africa. So a reduction of an outlet, in other words, the more that West Africa can take care of their own supply of gasoline. In a way, it's kind of bearish the EBOB contract because there's less of that less outlet to go. So more of it will have to point to the US. So it's going to be an interesting one. I think a long time ago, a trader even said this is the end of the European market. I think that's a bit of an exaggeration, but I get the point. There's going to be some restructuring. I also think it's worth noting that if it does run light sweet, that's got to be one of the first refiners that can absorb the incremental increase in light sweet supply we've had from the US and even WAF itself, West Africa itself. So I think that's kind of good news for, traders and crude rather than gasoline, because they can have one more outlet to place there. So yeah, it's not really going to have much of a global impact, but actually quite a big impact potentially on the structuring of the underlying market, as in our niche market.